today's guest goes by the Uneducated Economist, but I would surely call him very educated. He's correctly, in a way that very few people, whether it's in mainstream news and finance or YouTube channels, have been able to give us the inside scoop on a lot of the developing inflation, the rising prices in lumber and other commodities. So we're going to be discussing what's coming next. Is this inflationary environment for real? What does a reset look like? And what are the best ways to prepare ourselves? So today we got Simon on. First, just want to give a shout out to our sponsor today, which is Vizsla Silver, one of my favorite silver and gold mining stocks. So thank you, Vizsla Silver, for being the sponsor today. If you enjoy this episode, be sure to check out Simon's channel. If you haven't yet, I'll link it right there down below so you can go over and check him out. Give us a comment down below that says Uneducated Economist rules. And good to see you, Simon.
Yeah, thank you very much for inviting me on the show today. I'm really excited to be here.
So you've had your channel a lot longer than mine. And before I even started this finance channel, I used to, at least follow what you were discussing on your channel for quite some time. And a lot of those trends that you've discussed are starting to materialize, one of them being inflation, especially in commodities, lumber. Give us an idea of where you think we're at with supply shortages, commodities, inflation, transitory.
Yeah. This has been an interesting one because over the last year, we have seen some serious price moves taking place and everybody just really jumps onto that bandwagon of like price inflation, hyperinflation coming, no turning back from here, dollar destruction on its way. And when I heard this, I looked at lumber and I'm like, well, I'm pretty much in the lumber industry and everybody's pointing at lumber as the inflation scenario. And I said, I don't think this is quite what everybody is saying it is. Now, I experienced the supply chain breakdown of lumber, and I was trying to say it back then that what we are experiencing here with this lumber increase is not so much an destruction of the dollar, but literally a complete breakdown of the supply chain due to a series of really bad events. Now, a lot of people can call it manipulation or, done on purpose or however. It was in a sense, but it was really a series of events that came up to 2019. And at the end of 2019, when COVID kicked in, it just completely devastated the entire lumber industry. And that's really the reason that the prices had gone up so dramatically. Now, there is a lot of little stories that go inside of that, but that was really just in a nutshell what happened.
Do you anticipate supply chain disruptions continuing? And what does it look like in lumber? That's always been something that I feel like is overlooked, the supply chain disruptions. And we really saw it with the lockdowns. And, that's something obviously from a social stability perspective that certainly gets my attention.
Sure. And, if you look at lumber, if you're just like, that's my key focus. It's, I do retail sales for a living at a lumber yard. I mean, literally, like I ring up people at the counter and sell them 2x4s. That's my job. And I do orders. So I'm constantly talking with vendors, wholesalers. Since I've started this channel, I've talked with a lot of mills. So knowing like what's going on inside of the entire industry here, what I see coming into the future as far as what's happening here is that I see the inventories building. And so we're going to see prices drop. Now, if we just look at lumber and kind of compare that to what the rest of the items inside of the economy have done, lumber really did have a inventory shortage that took place, and rebuilding that inventory has been very difficult. So when it comes to lumber, you have distribution hubs, railways, trucking issues. There is all kinds of stuff that you need in order to get this lumber to move around the country. If anything is even remotely close to that with lumber, then it's going to take some time. But once that distribution network starts to become reestablished, we're going to see all the shortages dissipate and there is going to be an inventory build and the prices will come down. That's what I see coming into the future. I mean, how long that lasts, I don't know, but lumber is definitely coming down. And if that is a precursor to the rest of the economy, we better watch out because there's already been a 50% drop in lumber future prices.
So are you in the camp of inflation or in the camp of deflation?
I am probably more in the camp of deflation than I am inflation at this point.
Can you explain?
Yeah. Um, Really, it comes down to like, it started off with the great financial crisis when I started getting into learning about the economy. I saw the quantitative easings take place. I knew for sure there was going to be inflation. I thought for sure there would be hyperinflation coming from this. Dumped all my money into silver because I thought that was the best place that I could possibly be. And if you had asked me at that time how much longer the dollar has, I would have said it would have been gone by now. So I had to completely change the way I think. I mean, if that's the way I thought before, I don't think that way anymore. And I don't look at silver as something that's going to take me to some kind of riches and, have everything that I've ever wanted in my life because I bought some silver. Silver is my cushion to sleep at night. It's my system to get away from, the banking system or anybody's like app or envelope in the mail or something. It's mine. It's in my hands. It's away from everybody else. So it's an insurance policy. It's not an investment to me. So when it comes to like what we are experiencing right now, I think about more of like what Dr. Lacey Hunt says and how the money that is being created and where that is going is not going to create the inflation that people anticipate it's going to do. And the reason is because that money is going into debt, or that debt is going into consumption and not going into production. So at some point, you're going to have to postpone your consumption to pay for the past, spending that you have done. If that money had gone into production, then eventually those debts would be paid and we would have a prosperous nation after that. But ultimately, what's going to come from this is that right now, because we are pretty much what we are doing is postponing future spending for current consumption. When the future comes, we're going to have to postpone that consumption in order to pay for the past spending that we have done. That's where I'm kind of getting at. Once we have gone through all the stimulus, once we have gone through all the efforts of the Federal Reserve and their money printing and everything that they have done to try and stimulate this economy, we are going to have a reversal of everything that has taken place. Debts are going to start coming due. Debt destruction is going to start taking place, and we're going to have a liquidity issue coming up as people are trying to get as much money as they can in order to pay off the debts that they have. It's hard to explain that in just inside of a few minutes, but that's ultimately what I see. I see that the money that has been printed has gone into consumption and not into production. And at some point, we're going to have to postpone our spending in order to pay for that consumption.
Basically, you're saying that there's a debt bomb that at some point, no matter how much they print, there's too much that's owed. And so something needs to budge. And I wonder is that what you're saying, first of all? Because I saw you nodding.
That's ultimately what I'm saying, yes.
Yeah. So what do you think about like, I wonder about this, the incredible amount of people that owe money, right? And then you tack on the mortgages, the renters. I mean, that's going to be interesting to see what happens for sure.
Yeah.
And I wonder, the World Economic Forum talks about that you'll own nothing and be happy. And so I wonder about this debt bomb. And I go, is their plan to try to basically take ownership of everything through this debt bomb? What do you think about that? What do you think that these financial powers are intending with regards to that? And how does you'll own nothing fit into this debt that seemingly no one's going to be able to pay at some point?
Yeah. Well, that's really what it's coming down to. I mean, I think really if the powers that be had their choice, they would have every single person deeply in debt so they would be forced to constantly be servicing that debt. I think that would be like their ultimate goal, to have everybody in that condition. So when they say like you'll own nothing and be happy, I kind of try and envision what that environment would look like. Because I mean, if they're saying basically you won't need a car, you won't, because a car will just show up and take you wherever you need to go. That's kind of cool, really. Yeah, I mean, you don't have to. I mean, don't get me wrong. I mean, I drive a $500 car, so I really don't care about my car. I mean, I just use it to get back and forth to work. If I had a really nice car that I enjoyed driving, that might upset me. But for the most part, like I like having a car for about 10 minutes a day. You know, and so when I think about stuff like that, I'm like, well, I'm okay with that. I'm okay with not owning cars and then having, my transportation just show up and just drive me around, have self-driving cars and stuff like that. That stuff doesn't fear me at all. And I don't have any property, so I don't have anything to lose. I'm in a position in which that they're promising me that I'm going to be happy. Okay. I mean, I'll take it. I mean, I'm not scared of like, you'll own nothing and be happy. I don't get it. I don't, I already don't own anything. So,
So when you look at BlackRock, you know, stepping in and buying so much, do you think that that's an example of what they mean by that? And do you think it's possible that there's some type of a debt renegotiation that happens with BlackRock, where BlackRock basically takes takes total control of the housing market by essentially doing a mutual bailout between citizens, government, and BlackRock to basically centralize the housing industry?
um, I haven't found the information on this theory that I've had coming up on this, so I'll just kind of share it with you and see what you think about it. But ultimately, if these like BlackRock entities were able to secure enough of the housing market, then they could digitize real estate, right? Put it on the blockchain. If you concentrate enough of the real estate down to a handful of people. So it kind of seems that's a little bit towards their gear. I mean, why else would they be buying so much into the height of amount of the market? It just like, I look back and I'm like, why is this? Unless they plan on doing something with all these properties, that wouldn't kind of make more sense to me. So I think they're trying to concentrate it into a few hands so they can start tokenizing and digitize all these real estate
So if they
properties.
tokenize and digitize it and blockchain it, does that then allow them to whoever is living in it to basically become a slave to it? Because if they digitize everything, you basically have to play by the rules. Or what would be the purpose of tokenizing it and such?
Well, ultimately, I think that everything is essentially going to end up being tokenized, right down to our labor, right down to the individual. And it's I'm not a computer tech kind of guy, so it's hard for me to like explain blockchain in a simple term. But the way I kind of see it is that you are eventually going to have your money on a digital platform. That digital platform will then talk with all kinds of other digital platforms out there. Everything that money is going to spend or go to buy has to be on a digital blockchain as well. So whether it's real estate, cars, insurance services, or whatever it is, it's all going to end up being tokenized. Um, I guess a real kind of simple way to kind of explain it would be like if you can imagine an autonomous driving vehicle going down the road and it wants to pass another autonomous vehicle, it could literally pay that thing to move out of the way and slow down. This is the type of like interaction that I'm, referring to when it comes to like blockchain technologies. If you bought, say, a steak at the store, you would be able to see when that steak landed at the store, what truck it came on, what route it went through, everything that happened from that steak all the way down to, the birth of the cow. That type of information is going to be completely accessible for everybody out there, and there's really not going to be any more secrets. So what's going to come from this is that you're going to have a lot less like criminal activity, in my opinion. Like there'll always be fraud, there'll always be crime. But when you have it on a tokenized digital basis, it'll just come to a point where it's just like not even possible. Like I feel honestly, if this grows big enough, governments and courts and all that kind of system will just become irrelevant.
And then how does central bank digital currencies fit into that equation? It's something you've discussed.
Yeah. Well, central bank digital currency, I mean, ultimately, when I've started researching central bank digital currencies, because I was trying to figure out a way that the central banks are going to be able to go negative with their interest rates, with the effective funds rate in there. And now a lot of people were like, well, they've already done that in other nations. Yeah, but they haven't really done it successfully. It's not like those nations are really, doing quite well. They're all just kind of like stagnant and for the most part. And I know really the main reason is that they know if they go into a digital currency that they will be able to pull cash out of the system. And cash is really what's preventing them from going deeply into negative rates, using negative rates to the point where they can get it all the way up into people's savings deposits and stuff like that. That's the type of negative interest rates that I'm talking about. When you have like the central bank digital currencies um, in play, you're going to have what you have is you're going to have two currencies going at the same time. You're going to have cash and you're going to have a central bank digital currency. So what they'll do is they're going to put interest rate on the central bank digital currency that is negative. And then they're going to charge you to deposit cash or pull cash out. So it will be the same as if you had central bank digital currencies. People will become accustomed to the nuisance of cash and just go into the central bank digital currencies and just keep it there because of this pain that it is to use cash to go in and out of the banking system. Once they have everybody's locked into a central bank digital currencies, now they can apply negative interest rates. There's nothing you can do about it. You can't get out of the system. This is going to benefit the central bank digital currencies in the sense that they will be able to stimulate the economies. They'll be able to say, like, hey, if we're going into a downturn, all of a sudden unemployment kicks up, something's going on, they can immediately, they don't have to go through like the treasury and all the other, entities to try and distribute checks. They can just, boom, there you go. There's all your money. So this is really where the central banks want to go with it. They want to be able to have a negative interest rate and they want to be able to inject money at will. It's kind of going into the MMT theory.
And is it still deflationary at that point? Or if everyone has central bank digital currencies and they're stimulating it to that kind of a degree with negative rates and such, do you think it then becomes an inflationary environment? Or or are you in the camp of it kind of stays in this chasing its own tail kind of deflationary, never getting into the type of hyperinflationary or currency crisis type of situation that many guests on my channel have discussed?
Right. If they can get the central bank digital currency implemented, then yeah, it'll be the dog chasing the tail. But it's the fear of going into that, because that's where people like really start moving their money, right? They start going into silver, they start going into cryptos, they start going into other places with it, and this really starts disrupting the economy. But if they had no place to go, like if they were limited, central bank digital currencies just simply couldn't buy silver. You would have to, do a black market trade or something like that in order to acquire your wealth. This, if this was to happen, yeah, then the central bank has complete control over everything. They can inject money and take it away and prevent people or do whatever they want at that point. I mean, this is complete control. It's one of the reasons why I personally buy silver and cryptos. It's just like my two pieces of that I can get away from that whole system with. But to be honest with you, everybody out there, I've been stacking cash. When I see these markets moving up as high as they are, when I see everything out there is just, to me, seems so obscurely priced, that leads me to believe that the dollar has become unloved and unappreciated and unwanted. Well, those are the things that I want to be in. You want to be you want to buy low, sell high. Well, the dollar is unloved right now. And if there's a market crash, what do you need to buy in? You need dollars. So while everybody is saying dollar, cash is trash, I'm thinking, well, what are you going to do here in a little bit if the market does crash? You're going to be tied up in all your assets. You don't have any cash to buy the new stuff, right? Dry powder. So that's where I'm at right now, is that I have been really stacking a lot of cash right now, thinking like from my job, from YouTube revenue, from everything I do, I have really backed off on all the silver purchases, the crypto purchases, and I'm getting into cash because I'm anticipating that there's going to be some serious buying opportunities coming into the future.
Do we need a crisis in order for centralized power to be able to institute these types of central bank digital currencies on a mass or on a global scale? Is it a problem reaction solution, or can it just be? What do you think the plan is on a rollout like that?
Okay, yes, it will definitely have to come down to some serious pain, because what you're going to have to do is you got to get Congress to change the laws, because the Federal Reserve right now can't legally inject money into the system. They have to route it through the Treasury. It's just the way it works. But if you could, and the way I'm anticipating they're probably going to roll this out is they will have in a ready position some special bonds, okay, that the Federal Reserve will be able to purchase, and they will be triggered if a particular event happens. GDP, like unemployment rises to a particular level, GDP falls to a particular level. Some triggering event occurs, and then all of a sudden these bonds become available that the Treasury has already established that the Fed can purchase if this triggering event happens. So If they have the central bank digital currencies already established and these bonds sitting idle, and then all of a sudden that event happens, boom, the Federal Reserve is right there, buys the bonds and injects the money right away without any worry about going through the Treasury. However, leading up to that kind of event, you would have to have some serious pain taking place. And the Federal Reserve would have to come out with the arguments about how a central bank digital currency would be so much beneficial to the people, to the governments, to everybody out there, so that they can inject money right into the people's wallets without having to route it through the checking system of the Treasury. So they're going to use this argument that it's a benefit for the people. Once they have it established, it's just a matter of driving the wedge deeper.
And so between you talking about tokenized stuff and you were saying like, well, if there's some beef or whatever, like I didn't think that kind of sounded cool more than that sounded bad. But then, so it made me almost think it was kind of an optimistic twist or just kind of interesting, futuristic, interesting. But then when discussing central bank digital currency specifically personally, I stack silver and gold and crypto for the same reason. It's my physical stuff. I'm not buying it to resell it unless, there's a significant repricing that would make in some unique scenario. But it's me leaving the system because I personally think that the central bank digital currency kind of ties into a global social credit score system like the Chinese have, and the globalists are using the Chinese for an example. That's my personal opinion. And so I'm not super keen on the central bank digital currencies. Do you think that it is a move towards more of a Orwellian system, or do you not fall into that camp? And I ask you because so far you've had a couple interesting spins that maybe are different from some of my other guests. So just curious on what you think the goal is with these central bank digital currencies.
Yeah, I do. I think essentially it is down to control. It's control of the people. It's not hard to see that everything that has taken place, especially over the last year, that the amount of backlash that the government will receive from the people if they don't like what they're doing, it's like not even there. Like people will fall right into line with everything that they do. This central bank digital currency, it could limit everything about anybody. It will limit the where you spend your money, who you can earn it from, how much you get, how much you taxed. It can be like, if you let your mind spin on it, it can be one of the most scariest things that could ever come to our life. But I don't really live in fear. Like, I mean, I could see the problems that come from it. And so for me, it's just like, okay, well, if that's kind of an issue that's coming up, then I personally will try and gear my life in a way that I can avoid some of those things. Right? I won't rely on the government. People right now with a lot of investments and a lot of like property out there, they're very reliant on what the government's decisions are going to be. I can sit back and watch. I'm pretty nimble in the sense that, like I said, I don't really own anything already. So I'm, whatever happens, happens. I don't live in fear of that kind of situation. But yeah, the amount of control that can come from a central bank digital currency can be overwhelmingly scary.
So you're saying you look at this all and you say, yeah, this seems like this is the direction it's going, but you don't sit there and get mad or angry or afraid for any excessive reason. You just say, hey, look, this means that I need to build greater self-reliance. And then you just bring it back to what you can control and how to prepare. So maybe you could discuss a little bit of some of those ways that you're doing or that you think other people might be missing.
Well, I mean, to each their own. I mean, everybody's got, a different life to live. I mean, they have different situations, different networks. Now, me personally, I am out of debt. Like that was my key goal for a long time. The debt burden that I had drug me down. And once I was out of debt, it made things a whole lot easier to deal with.
Can you
So
talk about your process of getting out of debt for someone that might be in it right now? That's one of their goals.
yeah, hold on, I gotta open. So when ultimately it came down from like 2007 when I was going through the great financial crisis with everybody else, and I lost my job. I was doing like everybody else. You're trying to survive. So I ended up spending a lot of money on credit cards, and my wife had just had her first kid, and you know how things go like that. So we ended up going deeply into debt. When you lose your job, you lose your house, you're that deep in debt, you go into some serious depression. And that is hard to deal with, especially when you're that deep into debt trying to get out of debt. It's like this constant, like overwhelming feeling that you're just stuck. So when I made the decision, okay, I'm going to get out of debt, I would if mom sent me $20 for my birthday or something like that, I would literally take that $20 down and go and put it on my credit card. I mean, I was like focused. It didn't matter how much I had it was $5, $10, $100, whatever. I'd just go down and I'd just keep putting it on my credit card. And I went down there one day and I'm like, man, I've been putting a lot of money on my credit card. I wonder what I'm down to. And it didn't seem like I was down to anything. Like all of it seemed like it was still there. Man, years went by. But I kept paying it. I wouldn't use my credit card. I kept paying on it. And I started stashing cash. Like I filled up an envelope with $1,000. And once I had that $1,000, I was just like, man, I could go down and put it on my credit card, but it feels really good to have $1,000 cushion. So I just held on to the $1,000. I make, my credit card payments and make a little bit of contribution to an envelope. And once I had $3,000, I was like, man, that's enough to pay off all my debts. I went down and I did it. I went down, I paid off all the rest of my credit card after years of paying on it. And I walked out of the bank and I was like, holy moly, what a feeling. Like the feeling of like weight and stress and just everything's just gone. Like I'm standing in the store and I'm just feeling like just high as a kite, looking around at everybody going, why isn't everybody as happy as me? You know? I mean, I still was broke. I didn't really have any money, but I didn't have this burden all over me. I didn't have the debt collector saying that, yeah, if you don't give me money, I'm going to take it right from the paycheck. Man, it was the best feeling in the world. And then a few months later, I realized like trying to like kind of go into investments felt a little bit better. It was like a little easier to try and put money towards stocks or maybe buy a little bit more silver or stuff like that and saving cash. And then I realized, man, it's not so much about like having a new car or the cool thing or whatever. It's the capability of being able to buy it. Right? That's really where that feeling is. It's like you can drive the new vet or whatever and be cool for a couple of hours as you're driving it around. But at the end of the day, really, it's not the vet that you want. You just want to have that ability to buy the vet. You just want to drive the vet for the minute while you're doing it. So that's where I feel that the wealth has really come in after getting out of debt and staying out of debt and keeping my payments low. I feel free. I feel nimble. I don't feel worried.
That's awesome, Simon. Congratulations. I look at everything that's happening, right? And there's a lot we could be, as you said, fearful of or angry about or what have you. And whatever it is in my life with my own personal goals, I've tried to redirect that anger or that fear into creative energy to build my businesses better or create more freedom for myself, make myself more self-reliant, and trying to also share that on the channel without getting too preachy with it. And so I appreciate you bringing that up because at the end of the day, if we can't take something inspirational, motivational, or creative out of this awareness of the, essentially the greatest financial fraud or Ponzi scheme, you could go on and on and on. If we can't take something creative and useful out of it to create more self-reliance, more options, more financial freedom, whatever it is for ourselves, then kind of knowing it all and spending all the time into it to become an uneducated economist, which is kind of the journey that all of us are on. It almost becomes useless in a lot of ways. And so I appreciate you going there. I really enjoyed speaking with you. If you're viewing this right now and you think we missed something that you'd like to see us discuss more, please give us a comment, question right there down below, and we'll be sure to have it on a future episode. I'm going to link the YouTube for Simon right there down below. Make sure you hit the like button on this video to send it out in the YouTube universe. Simon, any last words? I enjoyed chatting with you.
Man, thank you very much for having me on your show. No, just thank you, and come check out the Uneducated Economist. I appreciate it very much, and hope to have another discussion someday.
Awesome. Thank you, Simon. And thank you for listening to this video. If you're new here, make sure you hit the subscribe bell notification, all that fun YouTube stuff. If you're a returner, thanks for coming back, watching this episode. And give us a comment down below. Let us know one thing you learned from today's episode, and we'll be sure to see you next time.